That's quite all right. Thank you, Anthony. And first, let me mention, I think, how lucky we are to have Anthony here as the chair of the conference. For those of you who don't know, Anthony is the chief executive of the Futures and Options Association, and he's done tremendous work not just in the UK, not just in Europe, but for the derivatives business worldwide. So Anthony, I think, is a tremendous resource, and any subject regarding the derivatives markets, I think Anthony is a wealth of information. So be sure to take advantage of his presence during the course of the conference. One of the things that Anthony didn't mention is that I've been spending about the last 4 or 5 years as a bankruptcy trustee in the United States. This is a government appointment, so it's given me quite a bit of experience and quite a bit of insight into issues that are impacting the futures industry today, such as MF Global, for one. But as I always say, if there's anybody in the room who's interested in filing for bankruptcy, just come on up and talk to me after the session is over, and I'll be sure to give you a little bit of advice. At any rate, I've been asked to speak to you today about what's next for commodity exchanges. In my view, that means I've been asked to make a prediction. And there's a few things that I've learned during the course of my career in the futures business about making predictions. The first is, of course, predictions are difficult to make, especially when they involve the future. The second thing I've learned is that most predictions are usually wrong. And of course, the third and the most important is that most people forget and never remember what you predicted anyway. So I'm sure my comments will be no exception to that last rule today. But I think in order to make predictions, we can get some assistance, some help at looking at what's happened in our business over the recent past. First of all, last year, according to the Futures Industry Association, almost 25 billion derivative contracts were traded worldwide. Derivatives volume grew by 11.4% in 2011 versus 2010. And I'm not sure this statistic is correct, but I believe that positive growth has been registered in the derivatives markets worldwide for something like 19 of the last 20 years. Last year, volume growth was led by precious metals, up 95% over the previous year. Currency derivatives up over 24%, equity derivatives up over 14%. The Asian region once again accounted for the largest portion of derivatives trading worldwide, with a 39.3% market share. North America was second with a 32.8% market share, followed by Europe, 20.1%, and a lot of growth coming out of Latin America, 6.4% of derivatives trading volume worldwide. In essence, things seem to be going very well for the derivatives markets worldwide. But I think that many of the issues that confronted our markets over the recent past are not all about growth, new records, and new trading volume statistics. We also experienced some adversity in our markets over the last year. Regulators rejected proposed mergers in Europe and proposed mergers in Australia. Shareholders rejected a proposed merger in Canada. We've had natural disasters like tsunamis in Japan and flooding in Bangkok that actually threatened those exchanges' abilities to operate. And technology failures continue to interrupt the exchange operations. And I think perhaps the biggest event of the previous year, the bankruptcy of MF Global, the loss of a significant portion of customers' money, has shaken investors' confidence in the safety of derivative markets worldwide. Now, I want to tell you a little story. I think the state of the derivatives industry, it reminds me in a way of a famous American movie. The name of the movie is called Apollo 13. It's actually a true story. It's based upon the Americans' third attempt to land men safely on the moon. The year was way back, it was 1970. And again, things were going very well for the American space program. The Americans had already landed two missions successfully on the moon. And the public at this point in time was viewing these space launches as very routine in nature, as almost routine. At that time, there wasn't any television coverage of this launch. There was very little news coverage. Everyone expected another very routine mission. So now the Apollo 13 space capsule, 3 astronauts aboard, was about 200,000 miles from the surface of the Earth. The astronauts were conducting some very, very routine maintenance procedures, some very, very routine maintenance operations. And boom, all of a sudden there's an explosion in the cockpit of the space capsule. Now, the astronauts immediately radioed the command and control center in Houston. That's where the operations were based, with the now famous phrase, "Houston, we have a problem." And did they ever have a problem? 200,000 miles from the surface of the Earth, space capsule is damaged, it's losing power, it's leaking oxygen, their water supply is contaminated, dangerous carbon monoxide gases leaking into the cockpit. Now they had everybody's attention. All of the world's attention was now focused on the astronauts in this tiny space capsule, 200,000 miles from the Earth. And everyone is now focused on the desperate attempt by the astronauts and the command and the control center in Houston to deal with the adversity that beset them and to engage in some very, very frantic attempts to return the astronauts safely to the Earth. So why do I tell you this story? Well, like the space program back in 1970, things have been going quite well for the derivatives industry, very well for the derivatives industry. Double-digit growth on a continuous basis, new volume records, new growth records. It's almost routine. Just like there are very, very smart people that worked in the space program, rocket scientists, the smartest people in the world. I think there's very, very smart, very, very experienced people that work in the derivatives business as well. Now, the astronauts in going to the moon, they knew there were risks. They knew there were many risks in trying to reach the moon and trying to land successfully on the moon and return to the Earth. Similarly, in the derivatives business, I think there are many, many risks in the derivatives business. And in fact, our business is all about dealing with risk. That's what it's all about. It's all about knowing risks. It's all about managing risks. It's all about dealing with those risks. Now, many risks we can plan for, we can anticipate, we can try to prevent them. But I think we've experienced many situations over the recent past where those risks may very well be impossible to prevent and, unfortunately, I think very, very difficult to control. So that now brings me back to the topic of what's next for the exchanges and what's next for the derivative exchanges in particular. Now, I could sit back here and tell you that volumes will continue to increase, new trading records will continue to be set, especially in the emerging markets around the world. But I suspect that everybody in this room knows that already. I could tell you that many new products are going to be launched by derivatives exchanges. But I think you know that as well. I can tell you there's going to be more competition, especially from the new and the so-called alternative markets. But I suspect that's not a surprise to anybody in this room. Technology, I think you all know it's going to get better, it's going to get faster, it's going to get cheaper. The use of technology is going to enable people from all over the world to access your markets instantaneously. But again, I suspect that everybody in this room already knows that. I can go on to tell you that market structures will continue to change, that more exchanges are going to go public, that more exchanges are going to enter into joint ventures, into mergers, into consolidations. But I think that's no surprise to anybody in this room. I can also tell you that there will be many new types of users that will be introduced to the benefits of derivative markets. But I think that's no surprise to anybody here. But there's a couple of things based upon my historic experience that I think I can tell you with 100% confidence, with 100% certainty, will occur in your markets. You're going to have periods of great volatility, and that volatility will stress the performance of your trading system, stress the performance of your clearing systems, stress the performance of your markets. I know you will have record high prices in some of the products that are traded on your exchange. Regulators, legislators, and the public will all want to know why you have record high prices in your exchange, why prices are so high. Conversely, I think you'll have record low prices in some of the products traded on your exchange. And again, regulators, legislators, and the public will all want to know why prices in your market are so low. You'll have some technology failures at your exchange. Yes, Amjad, even you at your exchange will have some technology failures. Everybody will want to know what happened. How can this happen? How will you be able to explain it? You'll probably experience some kind of a natural disaster. Maybe a tsunami, maybe an earthquake, maybe a fire, maybe a flood. Everybody will want to know how soon it will be before you can reopen your markets for trading activity. And would you know what to do if that in fact occurred in your market? Some other things that are going to happen in your market. You'll have some trader who tries to manipulate prices in your market. Everyone will ask you to explain what's going on. How would you be able to handle that situation? I'm confident you're going to experience a rogue trader. Somebody who puts on a very large position, somebody who loses a lot of money. Everybody will ask you to explain what happened. You're likely to have a trader who makes a big mistake when entering a trade. Enters buy instead of sell. Enters an order for 600,000 contracts instead of 6 contracts. Everybody will want to know why that could happen in your market. How would you handle that situation if it in fact occurred in your market? And I'll tell you that you're going to have a broker that will lose a lot of money in your market. You'll have a broker that's going to default on his or her obligations. You're going to have a broker that takes money from his customers. And you're going to have a broker that goes bankrupt in dealing at your exchange. Would you know what to do in these situations? Would you know how to handle it? Could you explain it to the public? Could you explain it to regulators? Could you explain it to legislators? I can't tell you when these types of things will occur in your market, nor can I tell you who it will be, what products will be involved, or even why they will occur. But these kind of events will occur in your markets. The probabilities alone dictate that they'll occur in your markets because, in fact, all of these situations I've described have, in fact, occurred in other markets around the world. So my advice to you would be to watch and listen very carefully to what experiences other exchanges are going through when these types of events or this type of adversity occurs in their markets. Because these events will occur in your markets. It's not a question of if, it is only a question of when they will occur. And when they do, would you know what to do? How would you handle that situation? How would you explain it as a leader of the exchange? Because you will, in fact, be called upon to do so. Now, inevitably, of course, as a result, I think we should be expecting more regulation in all of our markets. Even if these events don't occur in your market at this point in time, you inevitably will have more regulation in your market simply because these kinds of events occurred in someone else's market around the world. That, I think, is the nature of the exchange business. And if you ask me what's next, my simple answer is going to be more regulation, if only because certain events occurred in other markets around the world. Now back to growth. Growth, of course, is very good for our markets. Growth is great. But the growth doesn't come without risks. Unfortunately, risk is the nature of our business, and it can't be eliminated in its entirety. In fact, risk is why we exist as exchanges. I would just tell you, don't forget the basics of the derivatives business. As we all search for new sources of growth, we don't control prices in the marketplace. Our job is to ensure that prices are fair and equitable. In fact, the basics of the business are that commodity derivative exchanges allow prices to be discovered in a fair manner, in an equitable manner, and they permit one party to reduce his risk by transferring that risk to another party who's willing to accept it. That is the basics of the derivatives markets. And I think it's our role as managers of derivative exchanges, as managers of commodity exchanges, to ensure that our markets remain fair, equitable for all participants, and to recognize the risks that are inherent in our market. Obviously, we can try to prevent those risks if we can, but my point is that just due to the very nature of our markets, that some risks are impossible to prevent and unfortunately very, very difficult to control. But my point is if those types of events occurred in your markets, they could threaten the very existence of some of our markets. So my point will continue to be, how will we handle these types of events when they do occur? Will we know what to do? How will we explain them? So learn to expect the unexpected in your markets, because I believe that really is what's next for the world of exchanges. Now I'm going to take you way back. I remember when I was responsible for the operations of the Chicago Board of Trade. The year was 1992, and at that time the Chicago Board of Trade was the largest futures exchange in the world. Well, there were some construction crews that were doing some work on a bridge over the Chicago River. This was maybe 2.5, 3 miles away from the Chicago Board of Trade building. Well, again, way back then in 1992, all of the trading operations were floor-based trading at that point in time. But the construction crews were up operating on a bridge over the Chicago River, and one of the construction barges lost control and hit an embankment along the side of the river, and obviously created a big hole in the embankment in the side of the river. Now this is 2.5, maybe 3 miles away from the Chicago Board of Trade building. Well, little did anyone know that there was a whole series of underground tunnels throughout downtown Chicago. So the construction barge punches a hole in the embankment along the side of the river, and you guessed it, the entire downtown Chicago metropolitan area was flooded through this series of unknown, ancient underground tunnels. Well, obviously, all power to the downtown Chicago area was knocked out. Our building was flooded. All the power, air conditioning, everything was knocked out. In fact, City of Chicago government officials called for an evacuation of the entire downtown Chicago area. Well, I was responsible for the operations of the Chicago Board of Trade. Never in my wildest imagination would I have imagined that we would have a flood in downtown Chicago that would have knocked out all the power to our trading operations. That, I think, was an example of something that was totally unexpected in our markets. Now, fortunately, this occurred on a Friday. We were able to work over the weekend and brought in power generators, air conditioning units from all over the country, and in a matter of a few very, very short days, we were able to restore power, air conditioning to the trading operations and get the exchange back up and running. But my point behind all of this is that the exchange's members, the investors, the public, remembered this event not so much for the flood, because I think that was totally unforeseen, totally unexpected. But the event, I think, was remembered for, fortunately, how quickly we were able to get trading operations up and going and reopen the markets for trading. So now back to the story I'm telling about the space capsule, about Apollo 13. I think most of you know how that story ends. The astronauts, the control center in Houston, after 4 very, very tension-filled days, they were able to overcome the adversity that beset them and return the astronauts safely to the Earth. The very, very next Apollo mission, Apollo 14, men landed successfully on the moon. It was a very successful mission. They returned them safely to the Earth, and the American space program went on to even greater achievements. And I think today, as everyone looks back in history, that Apollo 13 mission was defined not so much by the adversity that beset them, the explosion in the cockpit, but rather it was defined by how well they managed the crisis, how well they managed the situation, their ability to overcome the adversity, and I think the extraordinary efforts that were extended to overcome that adversity and return the astronauts safely to the Earth. So that all brings me back to the topic of what's next for commodity exchanges. Well, I can tell you again, our markets will continue to grow. We'll set new records, new trading records in all of our markets. We'll add new products, we'll add new users, new technologies will continue to be developed. But we are also going to experience some adversity on this journey. We should try to prevent these events from happening, but the very nature of our markets will prevent us from being able to eliminate all of these risks in their entirety. As I've said before, some risks are simply outside of our ability to control them. So when this kind of adversity does occur in your markets, and it is the nature of our markets that it will we know what to do? Will we know how to handle it? Will we be able to explain it to the public, to regulators, to legislators? Because as I've said, these events occur. They've occurred all over the world. And I think we as an industry will be defined not so much by the events themselves that happen in our markets, but how well we can manage the adversity and overcome the challenge. So again, I would tell you in your markets, learn to expect the unexpected, because expectations that are being placed upon exchanges have, I think, risen to even greater and higher levels. More is being expected of exchanges, more being expected in the eyes of regulators, in the eyes of investors, and I think even amongst ourselves, we continue to increase our expectations. Again, what we do as managers of exchanges matters. It matters to buyers of products, it matters to sellers of products, it matters to producers, it matters to consumers. So in the end, I remain, I think, very, very confident that our markets will continue to grow. I remain very, very confident that we'll continue to set new volume records, new trading records, new activity records. But I think that what is much more important to the exchanges, derivatives exchanges, and the markets that we manage, what's much more important today is that we continue to manage well the risks that are inherent in our markets. I'm confident we'll continue to meet those risks that we encounter. I'm confident that we'll continue to manage well the adversity that besets them, and I think this journey of the exchanges and the importance of the exchanges in the world will reach even greater heights than ever before. So, thank you very much.
Fred, thank you.